Okay, folks, good morning and welcome to Swing Trading Today. This is Bob Desmond, the Contrarian Trader, and what we're going to talk about today, first off, is going to be the yield curve. Then we're going to segue over and into the pre-market activity, how are the futures behaving, and then we'll leave off with some watch stocks and some gold member stock chart request, which is where I review the symbols that our gold members submit for me to review on video. But first, let me talk to you about our partners over at TrendSpider, the home of game-changing automated technical analysis, backtesting, and chart monitoring software for active traders. I mean, folks, this is next-level software for the individual trader. I will be using it on this morning's commentary, so stick around for a demonstration. You could also go to their website by simply clicking the link. If you watch this on YouTube, in the description area, that'll take you over to their website and get a tour of the product. They do have a 7-day free trial offer, and we do include TrendSpider with our gold level membership package. So jump on the automated technical analysis bandwagon before their prices do go up. And I mean, their prices are very low for the value that they provide. So please check them out. Okay, so let's talk about the yield curve, because we haven't spoken about it in quite some time. And the yield curve obviously has been in a long-term downtrend. There has been pressure on longer-term yields to the downside, with pressure on shorter-term yields to the upside. Now, we did see some strength back in December, then again in February. Last month, we did break to new lower lows versus prior months. But this month, the month of April, we have not followed through to the downside. In fact, we are poised to close at the highs of March, and quite possibly, with a couple of trading days left in the month, exceed last month's highs. So what does that imply? It implies that what we're seeing is a bit of pressure on longer-term yields. The markets are expecting higher interest rates in the very short term anyway. We haven't seen a breakout here. But the question is why? Is it confidence that the economy is strengthening? Or is it due to inflationary pressures, or a mixture of both? Let's go to a chart of crude oil, and I'll give you my thoughts on why we're seeing pressure to the upside on longer-term yields versus shorter-term yields. Okay, this is a chart of light sweet crude, and you can see that we are at highs not seen since last August. So a major bull run here on the price of oil, which the Federal Reserve conveniently likes to back out of their inflation numbers because they like to use the word transitory. And they tell us that food and energy are volatile and should be backed out, and we should use the core number to measure the CPI. Now, in reality, in Realville, well, we have to pay those prices, so we know for a fact, as the average consumer, we don't have the luxury of backing out food and energy prices from our expenditures. So you can see here on this weekly chart, a major bull run here. We have a clear breakout above resistance. We broke out back here the week of the 8th. We now have a new weekly high this week, and it appears as though we are going to press higher. So my argument would be that I believe that the pressure on yields at current, and the reason why you're seeing less pressure on the yield curve, are inflationary pressures. And I've been warning about this for months. Taking a look at a 4-hour chart, you can see that we are stair-stepping higher here. A beautiful chart. We're a bit extended relative to the third standard deviation Bollinger Band here, the upper band in red. So we may get a pause or a pullback in the next day or so. But the trend is clearly still higher. Now, could the pressure on interest rates to the upside be due to the economy being stronger than what some may give it credit for? Perhaps on a relative basis, relative to other major peer economies. The economic data here has been coming out at best mixed. But relative to other economies, it may be just simply stronger. And you're seeing that reflected in the US dollar. Here's a chart of the Dixie where we've been consolidating. We have a possible cup with handle formation here. Downward sloping handle. Overnight, we did break out above the upper band of resistance. We are now retesting it, and it appears as though we may press higher this morning. Now, yesterday, we did see a bit of weakness. I went over this with members last night on Market Wrap, where we tested the lower band of support. We broke below it, but we did bounce back. And I did mention, listen, it's a 4-hour chart. It's a currency as well. It's very volatile. Don't put all too much stock into, pardon the pun, all too much stock into the break below the support level. The trend is still up. Let's give it a little bit of breathing room here. And sure enough, we did bounce back. Now, I will caution that RSI had been putting in higher lows. We have been putting in lower highs ever since the 18th, as well as putting in lower lows. Now, if we break out here, well then, in all probability, that means that we have broken out on price. We have broken out above this morning or the overnight high on the dollar, and the path of least resistance will resume to be to the upside. But watch for a break on RSI down below this lower band of support. I personally don't think it's going to happen. I think that in all probability, we are going to break out higher here in the short term on the dollar. So long story short, with the yield curve, I think that it's a mixed picture. We are seeing some inflationary pressures, no doubt about it. I mean, think about it. The price of crude oil is priced in U.S. dollars. The U.S. dollar is behaving very, very strong. Just imagine how high the price of oil would be if we had a weaker U.S. dollar. You would see oil prices just shooting through the roof. And you could extrapolate out of that what would happen if the markets ever decided that the U.S. dollar wasn't worth the paper it's printed on, and what would happen to commodities denominated in U.S. dollars, such as crude oil. They would be surging. Let's get to other commodities. Then we'll segue over and into the U.S. stock market futures. Let's talk about gold. Gold is under pressure this morning, down about $2.50. We are in a triangle formation. We are putting in higher lows in RSI. A possible double bottom setup here on RSI. It means nothing until we break out. So all we may be doing here is consolidating. Let's bring up a chart of gold on TrendSpider. Okay, this is a 4-hour chart with a weekly overlay in dotted line, or dashed line, I should say. Now, where we're trading right now on a 4-hour basis is in pretty much no man's land. The next real serious support level for the GLD is down at the 117.50 level, and that was last seen back here in December. Now, when I throw up a heat map here on a 4-hour chart, you'll see that we have some support going back here to last December as well. We'll see whether or not that holds. But if we break, we'll probably go down to the 117.50 level. Let's get rid of the weekly support levels, bring up 4-hour support. We're seeing a bit of support at 120.37, which is going to tend to be less solid support than what we'd see on a weekly basis. So in all probability, that is where we're going in the short term, especially if the dollar continues to break out. Back to Thinkorswim. Let's take a look at the stock market futures. The S&P 500 is down slightly on the morning. We're consolidating here. We continue to see higher lows. Yet we have a bit of a lack of higher highs here, but it means nothing until we break down to new lower lows, right? So right now, as far as I'm concerned, the S&P 500 is consolidating. I will warn, RSI is rolling over a bit here. But again, we have higher lows. And while we're lacking higher highs, we are not breaking down to new lower lows until such time we remain in the trading range with the path of least resistance remaining to the upside. The NASDAQ, we are down slightly on the morning. We broke out on Monday on RSI. Now we're doing a retest of that support level. And in all probability, given the trend of the NASDAQ, we are going to break out higher. We are a bit extended here relative to the third standard deviation Bollinger Band, but we cannot ignore the trend. It is higher, so we don't want to fight it. Let's leave off with Bitcoin, and then we'll go over to member stock chart request and our watch stocks. Bitcoin is up this morning about $135, 2.5%, and it is looking good. Let's bring Bitcoin up on TrendSpider. All right, this is again a 4-hour chart. First, we'll throw up our weekly overlay. All right, 4-hour chart of Bitcoin on TrendSpider. You can see that we have a lower band of support here, which has been respecting. We have surged up higher. Yesterday, we hit what was a prior lower band of support back here in early April, is now acting as an upper band of resistance. So short term, some overhead supply here. Buyers back here want their money back, and they are in the process of getting made whole by selling their Bitcoin. But this is a short-term blip on the screen. In all probability, we're going to press up higher here on Bitcoin. Members, we'll talk about the daily and weekly charts tonight on Market Wrap. Let's segue over into member stock chart request as well as watch stocks. All right, the first chart up this morning is going to be a member stock chart request, which is Microsoft. Thus far this week, we are up about 1/3 of a percentage point with a new weekly high on MSFT. Our indicators continue to rise here. I am concerned about these volume bars. Volume is dropping off sequentially. So what we'll want to do is take a look at where we have resistance above, because if we have an air pocket here, the volume won't matter all that much. But if we have resistance above, you're going to need buyers, and those buyers will reveal themselves vis-a-vis volume bars. To get through that resistance, they will be essential. So we'll take a look at that resistance level in a moment, because I know going back many years, we have overhead supply above. Now you may be saying, where would there be resistance on this chart given that we're at all-time highs? Simply take a look at TrendSpider. Now this is a weekly chart with a weekly overlay of potential resistance levels. And the next one is at, let's call it 124.16. After that, it's at 128.41. So it appears as though we still have some room to the upside here in the short term anyway before we hit resistance. Back to stockcharts.com. On a daily chart now. Yesterday, a nice follow through to the upside after flashing a bullish key reversal on Friday. Our indicators are moving in the right direction, which is to the upside. Volume was very good on Friday, but we've dropped back down again. So I think that we still do have some room to the upside here, but you really need to think about putting in a trailing stop loss order, because we will have some overhead supply in the coming days. The next chart up is Apple. We have a new weekly high. The MACD histogram is flattening out a bit, so MACD losing a little bit of momentum here and flattening out. Daily chart, a nice outside reversal day yesterday on Apple. We have higher lows and higher highs on Stochs. So the daily chart is looking very, very good. But volume, a bit of a concern here. We're dropping off sequentially. Let's take a look at the chart of Apple on TrendSpider. Okay, so you could see that we broke through weekly resistance last week. A very good performance. This is a weekly chart. Now, simply looking at the weekly upper bands of resistance and lower bands of support, it appears as though we have some room to move here to the upside. Let's take the weekly resistance levels off and support levels and just go with the monthly support and resistance level. Yeah, and it's confirming that we have more upside potential here on Apple. Now, what I will warn is that where we closed out yesterday was just shy of support back here in early August, and then we eventually broke down below it back in October. So this is going to be short-term resistance, but if we do break out and above this resistance level, I think that we're heading up to possibly all-time highs to test those highs. Will we break out? That's yet to be seen. Tesla weekly chart. Not a pretty chart. We are rolling over here on Stokes, rolling over on RSI. We're probably going to probe yet again the lower band of support. If it breaks, we're coming down here to, let's say, 245 per share. Daily chart. Now you can look at this two ways. The Stokes, they could be putting in a higher low, which if it holds this lower band of support and begins to hook back up, that could mean good stuff for Tesla to the long side. However, if we break down below this lower band of support, in all probability, that means that we are breaking down through key support levels on price. RSI, lower highs. Do we have a lower low? Not yet. Volume, very high. Let's go to TrendSpider, see how Tesla is looking. Okay, so you could see here that we are flirting with critical support on a weekly basis. And if we break this support level in blue, we come down to the 250 level. If that breaks, we can come all the way down here. We could see about 180 per share on Tesla. But that's way too early to make that call. We have a lot of support here. Let's see whether or not it holds. And key support that you'll want to watch is the 259.29 level on Tesla. Watch for a break below that level. And that is it for this morning, folks. Everybody have a profitable trading day. Remember to follow my YouTube channel. Visit our friends over at TrendSpider by clicking that link below. If you're watching this on YouTube, in the description area, or if you're watching this on the blog, you'll see a link above this video. Everybody have a profitable trading day, and I'll talk to you soon.